We all know that if you don't know what your next draw on liquidity is, what price is doing right now, or what price is most likely to do in the future, then you are not going to win the long-term trading game. If we know what our draw on liquidity is, we can place trades accordingly and make the most money out of the market. In this video, you will learn how you can identify the next draw on liquidity, so your trades are most likely to hit your take profit instead of getting stopped out. I will also teach you how you can use a top-down approach to place actual trades. Make sure to watch this video till the end so you don't miss out on anything important. Grab your notebook and let's get started. People usually get overwhelmed while trying to figure out draw on liquidity. Don't worry, I am going to simplify it for you guys. In order to identify draw on liquidity, you just have to ask yourself these three questions. Where is the price coming from? What is price doing right now? And where is the price heading? This will make sense in a minute. Always remember that price continuously moves from external range liquidity to internal range liquidity, then from internal range liquidity to external range liquidity, and this loop goes on forever. Internal range liquidity refers to any volume imbalance or a fair value gap. External range liquidity refers to swing highs or swing lows. In simple words, price only does two things. It is either rebalancing an imbalance or taking out the liquidity. Make sure to note that down, as it is a super important concept that will build your foundation for profitable trading with ICT concepts. Let's go over to some chart examples so you can understand even better. Here we are on the daily time frame for Euro USD. As we know, price is fractal. This concept is going to work on all time frames, whether it's weekly, daily, hourly, or even 30 seconds time frame. But the higher the time frame, more stronger and more probable it will be. So keeping all that in mind, let's try identifying the draw on liquidity on this chart. Now ask yourself those three questions. Where is the price coming from? If we look over here, you can see the price has been rejected from this fair value gap, which is internal range liquidity, and heading downwards. Now, what is the price doing right now and where is the price heading? Price is coming from internal range liquidity, so now we will be looking for external range liquidity to be taken. If we look to the left, we see we have these sell side liquidities, which could be our most likely next draw on liquidity. Let's consider this nearest swing low to be on the safer side. Let's play the next candles and see what the price does. And as we can see, price does target these swing low. Now either price can continue downwards and take this sell side below it, or it can return back to the range and retest the internal range liquidity. We have two fair value gaps in this price range. Now price can either tap into the lower fair value gap and continue below, and come all the way to this fair value gap and then expand lower. It is all about probabilities. Whenever you have two fair value gaps like this, you can use the Fibonacci tool to check which fair value gap is just at the premium. Because we all know, we should buy in premium and sell in discount when we are in sell program. Similarly, we buy at a discount and sell at a premium when the price is in the buy program. If we draw a Fibonacci, this upper fair value gap is in premium, so it could be our high probable target right now. Let's see what price does. As we can see, price has closed above this fair value, so our next target is clear, which is this fair value gap over here. There we go, this fair value gap also got tapped. Now after internal range liquidity, the price seeks external range liquidity. From here, price disrespects this fair value gap and completely fills it, then we can target this swing high. If the price respects this fair value gap, then we can target the swing lows below. Price is respecting this fair value gap, so what will be our next draw on liquidity? If you said this external range liquidity below, then you are right. We are respecting bullish PD arrays, which suggests that the price wants to go lower and target these swing lows over here. As we can see, the price took both of these with a single candle push. After that, don't have any internal range liquidity in this price leg to target, so we will be waiting for a fair value gap to be formed. Skipping a candle, we can finally see a fair value gap, so this will be our next target. Based on how price reacts to this fair value gap, either it rejects it or closes beyond it. We will then decide our next target. As we can see, the price closed above 50% of this fair value gap, which invalidates this fair value gap. If you don't know the characteristics of a fair value gap, then you can check this video out. You can find it on my channel. Now, As we disrespected the fair value gap, our next target will be external range liquidity, which is going to be this high. After taking this external range liquidity, we will look for internal range liquidity. We have this small fair value gap, which is already tapped once. We don't have any other internal range liquidity in this leg. So let's see what happens next. As we predicted, the price went straight toward that fair value gap. Now, the price hasn't closed below this fair value gap and it is respecting it. So our next draw on liquidity is clearly this external range liquidity. We also have a fair value gap. Let's play the candles, and let's see what the price does. Just like that, the price went where we anticipated it to go. See how you can frame a narrative to identify your draw on liquidity and increase your accuracy. This works on all time frames. You can also use it to identify your daily bias, whether you are using it to scalp or even swing trade. Now, before I show you how to use the draw on liquidity concept using a top-down approach and place trades and make profits. If you want to master ICT from basic to advanced in weeks and become a profitable trader as soon as possible, check out our Trading Titan blueprint for high-quality content, exclusive tools, and much more. Use code JUNGLE to get 10% off, only valid for the first 10 users. Let's get back to the video. As we can see over here, we have recently taken out this external range liquidity. So keeping that in mind, we will be looking for internal range liquidity. In this price leg, we have two fair value gaps, but as we know, institutions are buying at a premium and selling at a discount in this kind of bullish market, so I will be targeting this fair value gap and discount. Let's drop down to a 1 hour time frame. I will be waiting for the market structure shift on a 1 hour time frame so we can confirm that the price wants to switch from the buy program to the sell program and wants to go lower. After the market structure shift, I will switch to the 5-minute time frame and look for possible entries. We have a fair value gap over here and another little fair value gap at the top. I would like to enter my trade on 50% of this fair value gap. Stop loss will be above this recent swing high. For target, you can pick these sell side liquidities on the way. But as our draw on liquidity is clearly this fair value gap below, so I would be targeting that fair value gap as my final target. You can take some partials off and go break even on the lowest hanging fruit. Let me place my limit order, risking 1%. Let's see how this trade goes. Unfortunately, price didn't tag us into the trade and kept on going lower. You couldn't take new entries, but we are outside the kill zones. But anyway, price went to our anticipated draw on liquidity. It would have been a nice 1 to 3 risk to reward ratio trade if we were tagged into it. But that's trading. That's how you use to draw on liquidity paired with top-down analysis to improve your strategy's accuracy, increase your win rate, and ultimately make more profits. As a bonus for watching this far, here are some gems for you. While identifying the draw on liquidity, overlapping PD arrays are the strongest. Price is most likely to respect those. Avoid placing trades in general if we don't have a clear draw on liquidity. This video gets 70 likes. I will upload a video for identifying daily bias using the draw on liquidity concept. Don't forget to subscribe for more videos like this in the future. You might also need to check out these videos on the screen. Thanks for being part of the community.